Folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and what we're going to be talking about today are the three time frames of the S&P 500 chart, daily chart, weekly chart, monthly chart, and why you should need to be a bit concerned about this overall market, because I spoke about this last week on Sunday Night Futures Live, that I was very concerned about the price action of the S&P 500, and that I warned that we had seen some fading. I was worried about some whales moving in, selling strength, and that's usually an indicator that the markets are in trouble. In fact, here's what I had to say last Sunday on Sunday Night Futures Live. Kick things off first with equities. Last week was a rough week, particularly on Friday. We saw a lot of selling into the close, and it was institutional distribution, and we haven't seen that in a while. So while this evening we are moving up higher a bit, we're up just fractionally. And keep in mind, as we proceed into the new trading day, we left the day on Friday leaning down into the third standard deviation Bollinger Band on a 4-hour time frame, with RSI, which was at, let's call it 28. So, quote unquote, oversold, ripe for a bounce. So this price action right here, right now, no great shock. The question is, if they rally the markets tomorrow morning, as they did, I believe it was on Thursday, definitely on Friday, do they fade them again, right? You don't want to see bright green futures and then all of a sudden the market opens up and all of a sudden it reverses. That is bad stuff. That, to guys like me, that's blood in the water, because we know what's happening. They're pumping the market, and then the whales are moving in, and they're selling strength. They're distributing their shares. So if they don't want to be long, you don't want to be long. The problem is that a lot of people right here, right now, are in denial that this market will never, ever drop. And there are a lot of retail investors out there right here, right now, that weren't even trading before the markets were majorly manipulated. They got their stimmy checks. They're trading weekly SPY options, and they're going to get blown up. It's only a matter of time. It's going to happen. May not be tomorrow, may not be this year. It's going to happen. Eventually, we're going to get a correction. And you're seeing signs of one right now. So what I want to do here is create an alert. All I really care about before I take action on anything is, do we put in a new weekly low? We got to check that box before we change our strategy at all, because that would mark a new continuation breakdown. So you can see that going into the new trading week, we had a pretty good feel for market direction. It doesn't matter what stock you like, why you like it, you must appreciate market direction, because 80 to 85% of all stocks are going to trade in the general direction of the S&P 500. It's just the way it is. People who ignore that, like most fund managers who can't beat the S&P 500, learn their lesson the hard way. Don't be one of those people. I may be a contrarian, but we respect the trend, because the trend is your friend. But that trend is under a tremendous amount of pressure, and we're going to be talking a lot about it tonight on Sunday Night Futures Live. So join us, please, 6 p.m. Eastern Standard Time. There's a link below. 2 links you can enter your email address on. 1, just to get alerted 15 minutes to a half hour prior to us going live. 2, you'll join in and get our free 5-part video tutorial on my top 5 favorite candlestick patterns. Just enter your email address once, because I send out email notifications to all of our email lists as to when we're going live. I don't want you to feel like you're being spammed. So if you're already on our list, you're going to get alerted. Don't re-enter it. Anyway, I digress. Join us tonight, please, and we're going to talk in great deal about the Dow transportation stocks, the valuation of the market, and why I think that we're setting up for a possible recession in this economy. Before we go into the charts of the S&P 500, members, I've already posted in the members area the week ahead commentary. For those not familiar, those who are not members, that's where I review the closing price action of the weekly charts and the daily charts of most indexes and subsectors, along with our positions I give you my thoughts about where I think this market is going, and we talk in great detail about our focus stocks for the new trading week. So if you're not currently a member, sign up for our 14-day free trial offer using the link below. And our stocks for the new trading week that we like, Sam Adams, extreme oversold stock, along with Novartis. We liked them to the long side. You're going to look at the chart and say, this guy's crazy. Trust me, they're going to be buys very, very soon. Not investments, unless they're yielding a big dividend, but certainly a buy for a short squeeze. ISRG, Intuitive Surgical. Love the company. Don't like the daily chart. Twilio, like the daily chart. Possible swing trade. TZA, leveraged ETF, not for the faint of heart. If you don't like volatility, puts you short of the small caps. We own it. We're looking to add more. So let's get to it. Let's talk about the S&P 500 daily chart. As I mentioned on the clip from last week's Sunday Night Futures Live, the price action on Thursday and Friday, meaning the 9th and 10th of September, were very, very bearish for the S&P 500. In fact, that Friday, the 10th, we had closed right at the rising lower band of support, but I had also warned in previous commentaries that we were seeing a bearish divergence on the RSI, relative strength indicator. It was putting in lower highs and lower lows, yet the S&P 500 was putting in higher highs and higher lows. What gives? That's not going to last long. And sure enough, fast forward to the 13th, Doji Star formation, a sign of indecision. And then on Tuesday, the 14th of September, we broke to new weekly lower lows and closed there. It doesn't matter where you trade intra-period. What matters is where you close. And on Friday of last week, despite multiple efforts in an effort to recapture the prior lower band of support, the S&P 500 broke down to new weekly lows and closed there. Very bearish. Weekly chart. Now, could quad witching have caused all of this volatility last week? Maybe. Long shot. Yes, there were over $3 trillion worth of derivatives that expired on Friday alone, but I don't think that that was necessarily the problem. I think it's a scapegoat. It sounds good. $3 trillion expiring on one day because options upon futures expired. But I think it's more than that. I think you have a lot of moving parts happening globally. Not for case in point, I'll talk about this more tonight on Sunday Night Futures Live. You have the Chinese real estate firm Evergrande go bust. Boom. $300 billion of debt gone. No bailout from the Chinese government. And I've been asking for quite a while from the financial news media, who has counterparty risk in the West? Finally, we got the answer, beginning with Maria Bartiromo. I believe it was on Friday. Yesterday, we got more. And on Friday, Maria Bartiromo reported Vanguard had a position in their equity funds to Evergrande. Then yesterday, it came out, as you're seeing here, that Vanguard was a small fish, massive company, small fish relative to Ashmore Group. They're traded on the London Exchange. Never heard of them before. They have a major position. BlackRock, U.S.-based, big U.S. firm. UBS Group, Switzerland. HSBC, that's British-owned, Hong Kong-based. And with the exception of, I believe it was HSBC, which was up on Friday, down on the week. Most of these stocks took it on the chin on Friday. So the question is, if there's no Chinese bailout, who might be next? And who has counterparty risk? Also this coming week, we're going to have the Federal Reserve coming out. Will they taper? Will they not taper? We'll talk about that tonight on Sunday Night Futures Live. Folks, now we're going to move into our discussion of our top 5 charts for the new trading week. And we're going to be using the technology from TrendSpider, automated technical analysis. Folks, in this environment, we need to make quick decisions, but we need to be informed very, very well prior to making those decisions, because a poor decision can result in lost money. That's why you need to use automated technical analysis. Your competition is using it. I'm telling you right now, subscriptions to TrendSpider are flying off the shelf because the value from your peers are being realized in that they're able to automate their grunt work, speed up their technical analysis, but all the while improving their accuracy. They're reducing costly analytical mistakes by timing their trades with precision. How are they doing that? They're using trade alerts. If this, then that. That's a rules-based approach. If a stock breaks out, you can add or open a position. If it pulls back to a support level, as identified by the manually drawn trend lines that you draw or the automated trend lines that their algorithm picks up, then you can open up a position and get long, or if it breaks that support level, get short. Your decision. You have scanning, automation, back testing, huge. They also have an outstanding scanner to scan for really high quality stocks with great setups. They have a 7-day free trial offer. They also have a demo tour that you could check out. Their customer service, bar none, outstanding. They will hold your hand through the entire onboarding process. I believe in it so much that I include TrendSpider free with our silver and gold level memberships. We give discounts to our titanium level members, which is an entry level membership to the Contrarian Trader. 14-day free trial offer there. So folks, act now. Use the link below. I get you 35% off by using my discount code, and you can also get it free again with membership to the Contrarian Trader. Now let's take a look at our 5 top picks for the new trading week. The first one up is going to be Sam Adams, as I mentioned earlier. Extreme oversold stock. That's why we like it. We're going to go over a daily chart. I've already gone over the weekly charts with members on the week ahead commentary posted in the members area. So if you're a member, go check it out. But for the purposes of this tutorial, we're just going to go over the daily charts in the interest of time. So Sam Adams daily chart. We're beginning to see, after a big downtrend, the selling pressure on Sam Adams subside a bit. In fact, on Friday, you saw volume drop down. Now, what happened on Thursday was a bit concerning in that, I'm going to throw up the heat map here, is that we broke down to new lower lows, below support, and on Friday, we broke to a new daily low. So what this implies to me is that we're probably going to go lower. So as I mentioned to members on the week ahead commentary, what we want to do is we want to wait for historical support on either a weekly or monthly time frame to get hit. Why do we do that? Well, we're not whales. All right, so what we want to do is we want to wait for historical support to get hit, because at that support level, you're going to have buyers of like mind. Consider it crowdfunding. Right? You're going to have buyers of like mind in the aggregate. Thousands of investors all looking at the same chart. Now, let's face it, a support level is a support level. So you're going to have buyers of like mind all coming together with the consensus that, you know what, Sam Adams Beer, great company, extremely oversold, beaten to death, is ripe for a bounce off of historical support. I've gone over with members, as I've done with all of these charts, on a weekly time frame on the week ahead commentary. Go ahead, check it out, post it in the members area on the Contrarian Trader website, link below. So Sam Adams, we're probably going to go lower here. I like the fact that down volume is dropping off. RSI at around an 18 handle. It can go lower, but this is going to bounce very, very soon. Sam Adams bullish. The next chart up is Novartis. Now, Novartis is another extreme oversold stock. And I'm going to show you the functionality of TrendSpider of how you knew you had to get out of this stock. And we're going to use, first off, the automated trend lines. You can see that back here on August the 25th, we bounced, rallied. But we put in another lower high. Then fast forward to September the 8th, we broke down below support, and then ultimately, in red here is an automated trend line picked up by the algorithm. We broke down below this lower band of support. We closed at another lower band of support, but that ultimately broke on the 8th. You had to be out of here. The market's been sending you signals, lower highs, lower lows. And add to that, using the heat map for validation, you have a lot of congestion in here in terms of price action. Once we broke the support level here, on the 8th, it was a great indicator that at a bare minimum, we're going to retrace and test support at around $90.50, but ultimately that failed, broke, and the rest is history. So what's the game plan here? Well, we have RSI currently at around 17 on a daily time frame. I've already gone over this with members where we like historical support and where we believe we have buyers of like mind to enter Novartis for a short-term bounce, but not yet. We need to wait for a couple of things. One, historical support's got to get hit. Two, unlike Sam Adams, volume continues to rise. And on Friday, you saw volume rise above the moving average in blue. So that tells us we have still more institutional distribution going on here. So right now, it's just a watch. But at some point in time, we're going to look for a great entry point to enjoy a short covering rally. Now, ISRG, great company. It's been a great stock. I've been asked to review the chart many, many times. I don't remember the last time I was bearish on ISRG. Unfortunately, I am now. The weekly chart still looks pretty good, but it's a bit deceiving. The daily chart tells you a different story. Now, traditionally, a weekly chart takes precedence over a daily chart. A monthly chart takes precedence over a weekly chart. Why? Because the higher the time frame that you're using, the more of a smoothing mechanism that time frame is. So again, monthly chart takes precedence over a weekly chart takes precedence over a daily chart, so on and so forth. What happened here on ISRG is that we hit resistance, and this is the value of the automated trend lines. If I were to have entered this trade, where would I have gotten out, assuming that it was a swing trade? Well, what I would have done was use the automated trend lines, identified where I had historical resistance, and there you have it. Multiple resistance level on this daily time frame is picked up by the algorithm. And you can see that had you legged out here, you could have avoided this. Yes, we would have kept moving up higher, but you still would have been long because you only legged out a portion of your position. But you could have set alerts at these levels, letting you know that we have hit resistance. We all live busy lives, and sometimes you're not paying attention to the charts, but this is why you need to use automation to help you trade these markets. Set it and forget it. So it hit the upper band of resistance here, backed off. Here again, backed off. You could have legged out here another quarter percentage point, a third of a percentage point. All the while you're lightening up, because ultimately when we hit resistance here on September the 8th, that's when the bell rang. You had to be out at least 3/4 of your position. And we broke support here on the 10th of September, and we broke really, really hard. Last week, we had, and I mentioned earlier that we had a strong weekly chart, but I said it was deceiving. It was a good week last week, right? But all up weeks are not alike. What am I looking at here? Well, I think that we're looking at a bear flag setup, which is a continuation breakdown pattern. And when I overlay my heat map, it's confirming that I have a lot of infighting between bulls and bears at this level. Would I want to buy here? No. Would I want to short here? No. But I'll tell you what I do want to know. I do want to know when we break this bear flag setup. And should we break 1030 per share, I'd be interested in opening up a small short position, then adding on weakness. But I want to make sure that we close down below this support level. So I'm going to set my alert up and structure it that way. I don't care if it breaks down on Monday morning, 9:35 a.m. below Friday's lows or Thursday's lows. It doesn't matter to me. All I care is at 3:59 Eastern Standard Time, are we poised to close down below weekly lows? If so, then yes, I would enter a short position on ISRG, because that final hour is when big money puts the money to work for the next trading day. And now our alert is set. Now, I will point this out. RSI is really not helping this short argument, because RSI broke out and we are putting in higher lows, and the same could be argued for the price action. We're putting in higher lows. So RSI implies that we're stabilizing, but given the fact that the S&P 500 broke down last week and that 80 to 85% of all stocks trade along with the S&P 500, I'm willing to bet that we break to the downside here on ISRG, assuming that the S&P 500 breaks as well. Now, moving on to a potential long trade is Twilio. Now, Twilio has been beaten up over these past few months. The daily chart is looking pretty bullish, and I'll tell you why. I'm going to use the automated trend lines, the algorithm, and there you go. So you could see that we hit a bottom on August the 19th, rallied. Here's your pivot point, the high being 371.51. We pulled back. We put in a lower high. We broke the new lower lows. No great shock. But we retraced all the way back down to the lows of the 19th of August, and we held. Took a month, but we got back down there. We held. We bounced. Then what did we do on Friday? We broke out on a daily time frame. Very, very interesting. So now what we want to do is we want to create our alert here, and we want to know, do we touch, bounce, or do we break through the breakout point? I'll keep a little bit of sensitivity. Now, my comments here on this alert are a little bit contradictory. I want to explain it in a moment. So our alert is now set. We're good to go for the new trading week. Should we decide to swing trade Twilio to the long side? But ultimately, if we break, which is why I put on this comment here, possible long or short. Well, if we pull back and we do a retest of the breakout point, meaning we pull back on Monday morning, maybe Tuesday morning, we retest. What was resistance should now act as support. If we get a confirmation retest and then a continuation breakout, that's a buy signal. But what if we retest and it fails and it closes down below this support level? Then it becomes a potential short. Because what happens is, after a breakout point failure, you may also know it as a bull trap, meaning you break out, wow, bullish stuff, rah, rah, rah. And then all of a sudden, you break back down into this trading range. That is a very big discouragement for longs to add more to their position, and many of them just stop out, or you get shorts, or you get shorts that lean into the stock. And many times what happens is you'll retrace all the way back down to this lower band of support. Many times it breaks. Be careful. So that's why we set up that alert in that manner. Moving on, TZA. We already have a position in TZA. Now, the reason why I'm looking to lean more towards adding to our short position, as we did last week, we added more to our short position of the small caps, is that the rounding top on the Russell 2000 is far more established than on the triple Qs or on the S&P 500. We've been putting in a rounding top on the IWM since late February, early March, when it became extremely overbought. Now, that rounding top could at some point in time, and I freely admitted this, could turn out to be a consolidation setting us up for a breakout. But what you need to get that breakout is a vibrant economy, which we have no signs of right now. No signs of right now. Sure, you saw some manufacturing pickup in Pennsylvania and in New York, but that's not enough. You saw positive economic data come out last week, but the prior reads were reduced lower. So kind of an offset on economic data last week. So don't get lured in to the hype from the financial news media. All is not well. That's why they're pumping money into this economy. Because if they were to stop, things are going to get real fast in this market. So join us tonight, 6 p.m. Eastern Standard Time, Sunday Night Futures Live. We'll talk more about it. But as for the TZA, this is a leveraged ETF putting you short of the Russell 2000. What we're looking for here is a breakout. Therefore, a breakdown on the Russell 2000. And here is our triangle formation. And we have really entered the apex of this triangle formation. Ultimately, we closed down last week on the TZA. IWM eked out a gain on the week, but it's hanging on by a very thin thread. So I would not go adding more here to my position until we broke out. Now, you can see that we have RSI, which is rising, bullish, and we'll be watching for a confirmation breakout on RSI. And before I leave off, I want to talk a little bit about TrendSpider. Many times people think that I'm experienced with charts or I have no experience with charts. I don't need this product. Well, many times, there have been times where I've drawn my manual trend lines. I'm spot on, usually am. But there are times where the algorithm picks up something I do not. And there I find value. I don't have an example of that right here, right now. But what I do have is an example of when it's good when you have no experience with charts and you're trying to hone your skills at drawing support levels and resistance levels. Well, what if you had a validating tool to see whether or not you were accurate? You noticed earlier I drew this upper band of resistance. Was I accurate? Well, I know from experience that I'm accurate. But if I'm young and I really don't know much about technical analysis and I'm just learning, well, wouldn't it be nice if you're just able to click a button and just overlay the automated trend lines to see whether or not you're accurate? And there you have it. I was in the ballpark. I still like mine better, to be honest with you, because I am totally biased, all kidding aside. It's a great tool. Take advantage of it. 35% discount code below, the lowest price on the web, and I give it away free to silver and gold level members. Folks, please, if you get any value out of this video, like, subscribe. Join us tonight, 6 p.m. Eastern Standard Time. We're going live. We're going to talk about the valuation of the market. We're going to talk about the opening futures price action. We're going to talk about news that's coming out that can influence the market. So, again, please join us. Enter your email address below to get alerted 15 minutes to a half hour prior to us going live. If you're already on our list, don't enter it. You're going to get another email. I don't want you to get spam. I hate spam too. Thanks for being here. Have a great Sunday. Talk to you soon. Hopefully see you tonight. Be well.